Welcome into a daily editorial here on the KE Report, chatting with Jordan Roy-Byrne, founder and editor of the Daily Gold. Jordan, just a quick comment regarding your technicals, the charts that you're looking at when it comes to the precious metals. How much damage, or was there really any significant damage done yesterday on that pretty significant sell-off in gold, silver, and even some of the stocks? First, start with that, please.
Well, I would say with the metals, I mean, it's an ugly candle. It's a strong bearish candle. However, if you go back to the end of September, the last time we had one of those candles, and that occurred at the end of a 4-day sell-off, gold and silver. I should say the last time I got that candle, the next day after that, which is the last trading day or the first trading day of October, we saw a bullish hammer in gold, and that has been the low until now, basically. So, are we going to see a repeat? I don't think so. I think to put it short, Corey, there's more damage in gold and silver than the miners. I mean, I see very little damage, technical damage in the charts of the miners. Note, even though they gapped down, they actually formed a bit of a hammer, which means that they closed off the lows of the day. It means they tried to go lower, but they closed near the higher end. So there was a little bit of accumulation in the miners, whereas with the metals, it was just straight down and they closed near the lows of the day. And I mean, I know we'll talk about this, but we are seeing some slight differences in the action between the miners and the metals, and gold especially. And, the gold COT, I know we'll get into that, but basically there's still a fair amount of spec longs in the gold market, and they haven't really been cleaned out despite 2 months of correcting. So I'm not expecting any real upside for gold, over the weeks ahead.
Okay, but it sounds like at least what happened in the miners and the stocks, that this is, I guess, more encouraging because the miners closed off of their lows, and quite frankly, we didn't break any of these recent trading ranges or support levels that gold or the gold stocks had been in. So you're not seeing, I guess, a potential for a major pop coming up, but in terms of maybe a short-term trade, is this weakness that could be bought? We are seeing gold up today.
As far as weakness being bought in the metals, I would say no, because I still think that they're going to correct. And I honestly would say the same for the miners. It's just that, maybe the miners go sideways while the metals go a little bit lower. We could kind of see a divergence in that respect. So I'm encouraged by the action that I see in the miners, but it's not telling me that we're going to see this immediate launch higher and this big breakout in GDX. More so, it's telling me that they're holding up better than expected, and that if we do get the metals going lower, I don't expect that much selling pressure in the miners. Sure, if the metals, gold specifically, trades lower, it goes back and does that retest at 1400, that is going to drag the miners lower. But the question is how much lower, and the various signals that we've been seeing in recent weeks, they would say lower, but not that much lower, and not as much lower as you would think.
Okay. Now, one other comment, too, related to the U.S. equity markets. What kind of impact is that playing? A, on the actual precious metals price, but also the ability for the stocks to perform better relatively than the precious metals prices. Again, I think that there is this general risk appetite when U.S. markets, or markets in general, risk-on markets, are going higher. Then some people do actually dive into some of the junior stocks and even some of the miners.
Yeah, that's a very good point, Corey. I did an interview with Greg Weldon a week or two ago, and it's something that we've talked about because he's been bullish on gold, but also the stock market. And I talked to him a year or so ago, and he was not concerned about, as I was, about the stock market going up and that preventing precious metals from going higher. But to your question in the here and now, with the stock market breaking out and clearly in bullish mode, that first and foremost, that's really not good for gold. So It's not good for gold. However, in this kind of environment with a strong stock market, you would probably see silver outperform gold, and you would see the gold stocks outperform gold. And so we're starting to see early signs of that in the charts. Um, as far as if we're going to get another breakout or not, can precious metals make higher highs? That's another discussion. But generally speaking, I do like the action in the miners in the respect that we're clearly in a correction, but they're showing some relative strength. But the stock market going higher, what Greg Weldon said is he thinks you could start to see money move out of tech in some areas that have been really hot in recent years and into depressed areas like energy and also mining and perhaps base metals and the commodity sectors. So not just gold. I mean, initially those kinds of money flows are not going to be bullish for gold and precious metals. But if we see the stock market continue to move higher, people get concerned about inflation. We know the Fed isn't going to hike rates like they did 2016 to 2018. So if that becomes the story, and when it does, that's when you could see precious metals start to stabilize and begin that next move higher. But, whether that is 2 months from now or 5 or 6 or 7 months from now, we really don't know yet. So bottom line, Corey, strong stock market. That's it's not encouraging for gold, but in an environment of a strong stock market, you can still see gold stocks doing well. And one example of this is the 1960s, because a lot of people, when they look at precious metals history, they talk about the 1930s, they talk about the 70s and the 2000s, but they don't look at the 1960s. And this is something I've been looking at recently, and I discuss this in my book. But the action in precious metals relative to the stock market, and also looking at them individually, in recent years, it's very similar to what happened in the late 50s and the early 60s. And so even the stock market was in a full-blown bull market. It kept rising, but in the early 60s, gold stocks perked up a little bit. And, eventually when there was a chart I'm looking at, but the Barron's Gold Mining Index against the S&P 500, that ratio started to move up and break out in 1964, 1965. And when that happened, that's also when inflation started to take off. And that's when gold stocks strongly outperformed the stock market, and also when they really made some accelerated upside moves. And so the bottom line is, and by the way, when that happened, the stock market still was going up. So I think we need to look to that, to what could happen over the next year or two, if we get into this inflationary scenario. But again, the bottom line is, look, the stock market going higher, that's not going to prevent precious metals from rising. I mean, especially with the gold stocks, rather. The gold stocks, they can still rise. They can still do okay if the stock market is rising. But, if we're focused on that huge breakout in GDX and GDXJ, above the 6 and 7 year resistance, that is not going to happen without the gold stocks outperforming the stock market. So I know it's a lot to take in, but there is a lot of nuance with this relationship as far as precious metals and the stock market.
Okay, so I think one of the biggest takeaways here is that even though we had a pretty big sell-off yesterday, we are still encouraged by what we're seeing in the stocks and even in some of the action, I guess, more or less behind the scenes. But the fact of the matter is you're not really expecting any major breakout this year. We need to look to 2020. Can you also address the moves in the dollar, too? The dollar had a lot of strength yesterday, and the argument is that it wasn't strength because of a safe haven demand, more so strength because the markets just kept on moving to all-time highs and are actually kind of stabilizing at these new highs. How's the dollar playing a role in your eyes as well?
Well, the dollar looks like it put in a double bottom in recent days, and so that looks pretty bullish as far as the short term. I mean, the dollar looked like it had cracked in October, and now we see this double bottom just above or just below 97. So that's a real key level going forward. I mean, if the dollar were to break below that, you'd probably see an accelerated decline. But the impact of the dollar, it's such a great question, but I just think I would say bond yields and interest rates have more of an impact because with the dollar getting stronger, I mean, if that kind of strength is sustained and the dollar can challenge to make new highs, that's not positive for the rest of the world. That's going to induce the Fed to be more easy. So a stronger dollar, I mean, that actually helps precious metals. We've seen that over the last year as far as a stronger dollar necessitating easier Fed policy and rate cuts. But the issue with the dollar, Corey, is yes, it's been trending higher slightly over the last couple of years, but every time it looks like it's going to crack and have a big move down, it rebounds again. And so we've seen the same thing in the last week or two. So the dollar it's very difficult to call, but I don't think it's a central driving force here. I would focus on bond yields and the yield curve and looking at long-term yields and also short-term yields like the 2-year, which the Fed follows. I would really keep an eye on those because if we see a steepening curve and we see long-term bond yields trending higher, that's kind of good for the reflation trade, which initially would be bearish for precious metals, but eventually bullish.
Okay. Yeah, and you know what? We have seen a steepening in the yield curve, and that's something to pay close attention to. Just as a final comment, though, are you seeing a sweet spot in terms of a different sector within the gold stocks? Is it the juniors? Is it the majors? We still haven't had significant breakouts in really any of these general sectors within gold or the gold stocks. So are you seeing, again, kind of the play, maybe sticking to the majors first and using that pop to then trickle some of the profits into the juniors, or are you going straight into the juniors?
Well, I mean, I don't invest in the majors, so I'm always looking at juniors. I do think, I mean, what we can mention is in recent weeks, the silver stocks have actually been outperforming the gold stocks, and the juniors, as far as GDXJ, have also been outperforming the gold stocks. However, Corey, with that being said, and I'm talking about GDX here as far as the gold stocks, last Thursday, GDX's advanced decline line, this is a really great breadth indicator. It's an excellent leading indicator that actually made a higher high. It made like a 2.5-year high or a 2-year high on Thursday, well before GDX. So that's really encouraging. These things don't signal that the market is going to just suddenly launch higher and then sustain it. More so, they tell me that we're not going to see that much more downside as far as this correction, or it's not going to be as long or as deep as maybe I originally thought. But we're still in a correction. And with that said, Corey, I just think you have to look company by company and look at fundamental quality, look at things that are undervalued, that have a catalyst moving forward, that can really drive more buying, drive more upside. So those are the things that I'm looking for. Ultimately, I think, GDX, it has that 7-year resistance at 31 and 32. Eventually, when it's ready to make a big breakout, which I think will happen sometime next year, when that happens, that's probably, I think, when you're going to start to see money trickle into the juniors as a whole. And same thing with silver stocks. Although, like I said, silver stocks have already been outperforming. So that's a good sign. It reminds me of the summer of 2010, before we had that huge move higher in the sector, and that massive move higher started in silver. The silver stocks are actually outperforming leading into that. And so we're kind of seeing small signs of that again. I don't want to over promote it at this point, but a lot of interesting things going on here, Corey, and it'll be interesting to see how this correction matures, and if we're going to see these miners test lower levels, or are they going to test the October lows? Because if we see the miners legitimately test the October lows and then they hold them and bounce pretty well, that would be a really bullish sign moving forward. But we got to be patient and let that happen.
Okay. Hey, Jordan, I need to say that even after a day like yesterday when the metals moved down pretty significantly, but again didn't break, you're still pretty optimistic about the future for the metals. And you know what? Rightfully so. When we do see the stocks performing better than the actual metals price, that is a good sign. And it's actually a sign that we've been waiting for quite a while for this sector to actually start happening, where the stocks get some love, more so than just simply the metals price, especially gold. Jordan, great chatting with you. Everyone, click that link below. Go visit Jordan's website and keep up to date on his technicals, what he's writing to subscribers, and even some of the stocks that he is following. Jordan, thanks for your time today.